Kieran, what about the India macro picture, as well as some comments on China? Would you like to?
Sure. I mean, India's had a number of reforms over the last few years. As probably lots of you know, lots of excitement around when the Modi government first came in. But as a bond investor, the reform that I care most about was this shift towards inflation targeting, which was started really before the government got on board, but the people at the top of the RBI, who were sponsors of the policy, obviously managed to persuade the government that it was a sensible one. And the reason it's quite exciting is because for the first time in forever, you can actually make a real return on an Indian government bond, which for most of my has actually not been possible. Inflation in India, it's going to hopefully be centered around this inflation target at 4%. I think we're expecting 4.5% this year. But with bond yields around 7%, and actually a little bit of a steep yield curve even, so you get some roll down if you buy a longer dated bond and you hold it for a couple of years, then you get a little bit of a revaluation effect as well. Because of this steep yield curve, which is also something that was fairly alien to the Indian bond market through most of my career. And of course, this has come at the same time where it has just become much easier to actually buy bonds. Whether that's because of changes in regulation of the quota. So the quota has increased a little bit. It was actually increased again back end of last week by about 20%. For the government bond market. So now foreigners will be able to buy the 1920 fiscal year, foreigners will be able to buy 6% of the notional of the Indian government bond market. But we've also seen a number of micro reforms actually on the transactional side, which has made it much easier to buy and complete the purchase of Indian government bonds. And that really has been a big difference over, say, 10 years ago, when you would probably have about maybe a 60% hit rate of actually completing a trade that you'd agreed, in my experience, especially if you were based in London. And you have some very, very short cut-off times for confirming that you've done a trade into the RBI's negotiated dealing system. I mean, you actually still have those very short cut-off times, but the processes have become much cleaner, and the authorities have made a real effort to be able to get those processes much smoother and much quicker. So much lower risk transacting in the bond market now. The corporate bond market continues to develop as well. It's a very, very liquid market. For quasi-sovereign, very high quality credits, we can pick up an extra 0.5% or so in yield. And then there are a number of banks and finance companies and utilities as well, which issue at slightly higher yields than that. So yeah, really a market that we think is very interesting indeed, and has been helped by some macro reforms and some micro reforms in recent years.